Good morning, everybody. Just to make sure that y'all can hear me, please press 1 in the chat and we'll get started. Good morning. All right, leave a like on the video and press 1 in the chat if y'all can hear me. It's night there in Singapore right now. Let's see. I've always wanted to visit Southeast or like Eastern Asia. Would be really nice. Okay, got a few ones in the chat, so we'll get this thing started. Hopefully y'all are having a good day so far. Got to go to the gym today and play some basketball, so back in my routine, feeling good. Hopefully that translates into my trading. But heading on over to the Discord, let me read through my morning market update. So we had core PPI, which is the producer price index, come out, and this was slightly higher than expected, but it was significantly down from last month. So markets initially sold off whenever that came out, but I'll read through the little market update that I have. So markets were down 0.3% after the PPI came out, slightly worse than expected, 0.3% month over month versus 0.2% expected and 0.3% last month. So not really any change on the month over month reading, but when it came down to the year over year reading, this came in at 7.4% versus 7.2% expected, but this is down from 8.1% last month. So that is a pretty significant drop that we saw in the year over year reading. So I said this was a substantial drop in terms of the year over year reading this month compared to last month. So I do think that is kind of a good thing. Probably not going to allow the markets to sell off that much. That's kind of the contingency. But I do think, the market sell off could be probably warranted just because it didn't come in at the consensus or at what was estimated. People probably want to see inflation dropping a lot quicker, and that's not what they got. But what's interesting that I noticed yesterday, thanks to one of the members in my Discord, is PPI and CPI basically track each other for the most part. If we go to investing.com, the economic calendar, I'll link this in the chat for everybody. But if we look at core PPI, which again just came out, actually I want to look at the year over year reading because the month over month reading is very volatile and harder to really judge. But if we look at the graph, the little line graph, and then we pull up CPI right next to it, and this is something that I did in the premium live stream yesterday as well at 3 o'clock, but I'll do it again for y'all too. But CPI, consumer price index, is coming out next week on Tuesday. I think. Pretty sure, yeah. So, if we look at these two side by side, using the line graph, they're basically identical, right? So we had another down month of PPI, which means that we're probably going to have another down month of CPI. So producer price index, consumer price index. So whenever producers don't have to pay as much money to create their goods, that means they pass those savings on to consumers. So the PPI came in at 6.2 versus 6.8 last month. So, a decent 10% drop. So we might be seeing CPI coming in at 7% next week on Tuesday. Now, I do want to see what the consensus is. I tried to find what the forecast was, but right now it's not really showing that. So it's kind of hard to judge, obviously, what that is going to be. But the previous, again, was 7.7. I would imagine the forecast would probably be like 7.2 or something if I had to guess what the consensus was. And I think we're going to come in below consensus. Again, at around like 7%, just based on what we saw with PPI today. So that's what's going on in the market. We have another economic report that's coming out at 10 a.m., the Michigan Economic Report. What I like out of that is the inflation expectations, but for some reason, investing.com doesn't think that inflation expectations matter. But if we go back to the econ calendar, let's see. Go blue. Michigan. Oh, that's a Michigan reference. I caught that. Okay. Yeah. So the Michigan report's coming out in 27 minutes. You have the inflation expectations, which I think is probably the most important piece of data, but investing.com rates as a low volatility event. But then you have the Michigan consumer expectations, so what the consumers expect for the year ahead. I think this is going to come in worse than expected. Last month was 55.6, and I think, we're kind of seeing recession fears spread throughout the market. So I think this is going to come in worse than what's expected and worse than last month. I think that could cause potentially a sell-off just by itself. Then we do have consumer sentiment. I do think that this is actually going to come in higher because everybody's kind of feeling good about the economy right now. Everybody is spending money like crazy, especially for the month of December, with the holiday season and everything. So I do think that this is going to come in higher than expected because the expectations is just barely above what it was last month. So I think the expectations is going to come in lower. The sentiment is going to come in higher. And then you have current conditions, which is basically sentiment. And then, again, you have inflation expectations, which investing.com doesn't put a lot of weight on. But I do think if there's a combination of higher inflation expectations and worsening, expectation, like consumer expectations, this one right here, then that is a signal of stagflation, which is probably the worst thing that you can have in an economy, because that means that people are getting laid off while prices are remaining high, which is exactly what you don't want. You want people to be making more money while also bringing prices down. But that's the ideal world. Obviously, we don't live in an ideal world, but did make an ideal trade on Lululemon. Opened a put debit spread, assuming that it would be below $360 as of next week's expiration, 12/16. Their earnings actually came in better than what was expected. The problem was that their inventories are increasing. So whenever there's more supply and, lower demand, the prices of their clothing have to come down. So what they'll do is they'll, mark down prices, create sales in order to get rid of the excess inventory. So going forward, you're probably going to see a lot of sales from Lululemon. I talked about this yesterday, but I don't feel like a lot of people are going to be spending $50 or $100 on a t-shirt to go work out. I wear a $5 t-shirt from H&M to go work out. But that's just me. I don't like to spend a lot of money on clothes that I'm going to sweat like hell through. Obviously, just my silly opinion. But Lulu did end up selling off pretty dramatically, I guess. And I'm assuming that it's going to stay below 360 next week, so 1216. And I do think that it's probably going to be amplified. The sell-off is going to be amplified by the Fed meeting next week on Wednesday. So I could hold this. And I would say there's probably around an 80 to a 90% chance that this trade works out. Right now, they're going for about $8 each. This is a $10 spread. So given that, I might be able to sell these for $8 each. So let's see. Let's see how this works out. All right, so the mid price is $7.58. The bid is at $5.40. So it's unlikely that we're gonna get filled at $8, but we can try. I originally paid $4.10, so that's a 100% profit. Almost 100% profit if I can sell them at 800. I'm just gonna close. I think I'll close both actually. Oh wow, the price is really ramping up on these at 875 now. Oh wow. Might need to reassess. Give it like a few minutes before I close or something. Looks like SPY ended up making its way back up a little bit, back to break even. So kind of what I expected for the market. I think that we're probably going to trade flat until probably around 10 a.m., but I don't think we could really make a trade on that just because of the Michigan report that's coming out at 10. So I think the way that I want to trade it is probably going to be to the downside. And I've noticed with a lot of my trades recently, it's been a lot of credit spreads, and the credit spreads have been kind of slapping the crap out of me. So I think I'm actually going to do a debit spread, and I think the reason behind why I'm losing money with credit spreads is because volatility is likely underpriced. Right now, VIX is trading at 23. And the rule that I've kind of stuck by is if the VIX is below 25, then you want credit spreads because volatility is low, and then if VIX is above 25, volatility is high, so it's better to be using debit spreads. I talked about this in a previous video comparing the two, and it's just because like the volatility is going to make the swings of the option that much more kind of violent, and it's better to risk less money by using a cheap debit spread than it is putting up a crap ton of collateral for a credit spread. Jan said that Robinhood fills are so bad compared to TDA. Yes, you are 100% correct on that. The best fills that money can buy are either Fidelity, has really good fills, and E-Trade, which both platforms are absolute, excuse my French for this, but both platforms are absolute dog shit when it comes to like the user interface and the usability of their app. So that's kind of why, I've stuck with Robinhood, just because the UI is so stupid easy to use. But I am probably looking to move over to E-Trade because of their fills being so good. Spending an extra $2 a spread because of the bid ask is really, eating into my profits if I'm opening like 30 to 50 at a time. So, yeah. Why not IKBR? I mean, IKBR, I feel like E-Trade and Fidelity have a better interface than IKBR. Like, IKBR just has too much going on for me. Whereas E-Trade, they try to dumb it down at least a little bit. But IKBR just has like so much going on in their platform. It's just too much for me. But let's see. I really want like a very modular, like in an ideal world, you would want like a Robinhood platform with a with E-Trade or Fidelity type fills. That's like the ideal brokerage, but obviously we don't have that. Maybe one day we can start that. But I know that brokerages cost a whole lot of money to start, so. Anyway, so I'm going to open a put debit spread for SPY going into the Michigan report that's coming out in about 20 minutes. Right now we're trading at 396 basically. I'd say we're pretty hard pressed to go back above where the middle of this candle is, but I could be wrong. Let's see though. So 380 numbers, 398.35 plus close at 395.13. You divide that by 2 and you get an average of 396.74. So I'm going to move this down to 396.74. I'm going to create an alert with that drawing because I want to know if it goes above it at any point if I'm looking at anything else. So crosses above price level number 31. We are pretty far from it. We're another $1 away. We have about 17 minutes until the Michigan report comes out. I think there's a decent chance we hit the 396.35 price target first. Well, obviously we have to hit that first to get to 396.74, but I think we want to open around either 396.35 or 396.74, depending on how quickly the market goes up. Lulu tanked, Suburban Moms didn't pull through. Yeah, Costco, I don't think Costco did well either, so Suburban Moms really out here lacking. Cost came in, down 1%. So yeah, Suburban Moms are failing us. We need more spending from the Suburban Moms. And then Chewy too, funny enough, reported they're actually doing pretty well in the open. I didn't look at their earnings, but came in at negative 8 cents versus, that's the estimate, was negative 8 cents. Do you look at standard deviation and expected moves? Not for specific options. So I base my entries on like my thoughts on the expected move. So what I do is I have like a mental probability of what is the odds of this option working out, and is there any arbitrage between what the markets are telling me and what I'm thinking. Now, obviously, I'm not always going to be right, so the strategy is not foolproof. But let's open that put debit spread, and I'll try to explain it along the way. So I'm going to look at SPY. A put debit spread is what I want, and I want this expiring today. Looks like we just hit that 396.74 mark, so now is probably the best time to get in, unless it just keeps on ripping up to 398. It's possible. But I want to say, I think we're pretty far from the 395 mark, but I don't think that it's impossible to reach. So what I would do is I would buy the 396, sell the 395. So this is for the Michigan report that's coming out in about 15 minutes. Right now they're going for $35 a piece, which is kind of expensive. Let's see. Oh, looks like we're pulling back already. As soon as I want to open this trade, of course, SPY has to pull back and make these contracts expensive. But my thinking behind this, if the Michigan report comes out really bad, I would say there's probably around a 70% chance of this $1 spread being in the money. All right. So right now the markets are telling me that there's only a 40% chance of this trade working out because they're trading at 40 cents a piece. Again, this is a $1 spread. So there's a 75% discrepancy, 30 over the $40 price, between what I'm thinking is a possibility of this trade working out and what the markets are telling me. So I'm thinking that there's a 70% chance, so I would sell these at 70 cents a piece, but the markets right now are telling me there's a 40% chance, so I'm paying $40 each. So that's the way that I kind of think about spreads and how I open them. I don't really want to pay more than about 45 each. I ideally want to get it at 40. This trade, I would probably be willing to risk like 500, so I'll open 12. I really don't want to overpay, but it looks like we got rejected at that 396.74 mark. So I'm going to place a limit order to open at 42. Looks like we're going to get filled right away for it. Yeah, sweet. So let me post this in the trade alerts. So I'm okay with losing around $500 if this trade goes south. This was a low confidence trade, but if the Michigan report comes in bad, then this would turn into a high confidence trade. But let me post that in my alerts tab for the Discord. Hello. There we go. All right. New options alert. Everyone just opened a new SPY 396, 395. Right? Those were the strike prices if I remember right. Yeah. Put debit spread. Expiring today, 12/9 at 40. What? What was the price that I got for them? 504 over 12. 42 each. Sweet. And this is a day trade. Alright. Alright, so sending that alert through. So the analysis that I came up with for that trade, Michigan report comes out in about 10 minutes. Expecting higher inflation expectations and worsening consumer expectations, leading to a consensus of stagflation, which is the worst state for the economy. As people lose jobs while prices stay high. The market liked the higher PPI numbers. The thing is, though, like I said in the beginning of the stream, is yes, they were higher than expectations, but if you look at last month's reading, they were a lot better. So that means that CPI next week is going to come in good. That means that CPI next week is going to come in better than it was last week. So that's why you're seeing the market reacting slightly positive, right? So PPI leads to a lower PPI leads to a lower CPI. So that's kind of the puzzle pieces that the markets are putting together, and likely why you're seeing a little bit of a rise on the open. But right now, looks like we got rejected from the 396.74 mark, headed down to that 395 mark that I wanted. Right before the Michigan report, in about 9 minutes, I could reduce my risk, just because this is a binary event, like anything could happen. it could go completely south on me. And I'm sure that these are already up, significantly. Actually, they're not up that significantly. That's interesting. They're only worth 45 each. I would have expected that they would be worth like 55 or 60, but I guess not. The markets just aren't willing to pay that yet. I think they will be, though. Anyway, let's check out, though. The Costco spreads are doing okay. I do want to cut my losses on this. The thing is, like, Costco's earnings was good. It came in slightly above expectations for revenue and earnings. Not really sure why it's not moving much. Like, it's up like 1% or something, like very marginal. So that screwed us over because this was a bullish trade, assuming Costco would go above 490. Right now it's trading at Right now it's trading at 476. So I think odds of going to 490 is pretty low. My break even for these is 484.10. And I think given my expectations of a market sell-off, I think it's just best to sell this. Save myself the $150 extra that I would take on max loss. Let's see. The mid price is 169. I'm going to try for 165. See if that order goes through. Yeah, we actually got filled at 171. So I did end up taking a loss on it. But it's better than taking that extra $170 loss that I would have taken if I took that max loss. Because I don't think that Costco's going to do too well if the markets sell off first. But let's see. Let me post this in the alerts tab. Whoops. All right. Please. Damn it. I don't know why Discord just doesn't want to take my images today. Very strange. All right, there we go. All right. Closing options alert. Oops. Everyone. Just cut losses on the Costco. It was 480, 490. Call debit spread expiring today, 12/9 at 171. And I opened just one of those, so didn't spend a lot of money on it. Wasn't super confident. Costco call debit. Oops. Opened it at 410. So 410 minus 171, 239 loss. But we definitely made up for that with the Lulu trade that I ended up taking on. We got about 5 minutes until the Michigan report comes out. So let's wait around for that, see how that treats us. All right. So the spreads that we have are going for 50 now. That makes about sense since it's trading at 395.50, right in the middle between our strike prices. Up $100 so far. Coming down to that 395.14 level. I don't think that we break below that before the report, but it is possible. And I think if that's the case, that's definitely going to land us in the money for those spreads if the Michigan report comes out to my expectations, where consumer expectations are low and then inflation expectations are high. Again, stagflation is awful for the economy. So we'll see. Overall, that just means people have less discretionary income to spend on buying stocks, essentially. Looks like bond market is actually pulling back a little bit today. The 10-year Treasury yield is up slightly. TNX. It's actually on a 2-day rally. That's surprising. Let's check out the FOMC watch tool, see what the rate odds are at. I'm sure that I'm sure that a 50 basis point is basically still guaranteed at this point. So, hey, how's it going? Yeah, so 50 basis point is in the bag for December next week. There's a 74% chance anything above 50 the Fed is going to follow. But if the Fed decides not to follow the Fed futures, that is when you get an insane sell-off. That's when you would see like a circuit breaker down like 7% in a day. I don't think that the Fed has the guts in order to do it. But if they do, that would be absolutely chaotic for the market. And that would definitely bring inflation down. So if the Fed is that serious about bringing inflation down, that's the way to do it. Go against expectations. All right, so the Lulu spread is going for 950 at this point. I'm going to check Aries to see what the spread is on there. The bid-ask spread, because the bid-ask spread on Robinhood is ridiculous as always. 700 for the bid and 1200 for the ask. I don't know who's asking for 1200 when it's like more than the spread width. It makes no sense. But yeah, let me log into this Aries account. Remember this device for 30 days, please. Lulu options. It's trading at 330. So yeah, the odds of going back up to 360, going up 10% in the next week is pretty low. It's not zero. Like if the markets react well to the CPI next week and they react well to the Fed meeting next week, then yeah, I could see that making its way back up to 360. But right now, the odds are slim. So I opened a 370, 360 put debit spread. We got to load more strike prices because it's so far out of the money. That's a good thing. So buying the 380, selling the 370 put. Sorry, I put the wrong dates. I need the 12/16 expiration, and I put down the 12/9. But let's scroll back down. All right, so we bought the 380, sold the 370. And this is going for 975 at the bid and 970 at the ask. So we can sell these for 970. Is what they're telling me. We'll see if that's actually the case. Something's pulling my portfolio back right now. I'm not sure what it is. Oh, so the Michigan Economic Report just came out. Looks like the initial reaction is positive. Well, let's see, actually. No, looks like initial reaction is undecided so far. Let me pull up the econ calendar, see what we came in at. So consumer expectations is actually better for next year. Interesting. So consumers expect the economy to be doing better next year than they did the previous month. Consumer sentiment came in very hot at 59.1 versus 56.8. Inflation expectations came in at 4.6, so this is down from last month. and lower than consensus. And then that's the 1 year expectations, and the 5 year expectations remain the same. So I think this is actually a decent report. Markets are kind of undecided on it if it's a good report or a bad report, but I think that it's actually a decent report. So I think I'm going to close out of these spreads. Probably just take a small $50 gain, but it's better than no gain. So I opened 12 of these. I'll close them. The bid-ask spread is crazy wide on it, obviously. Just made today's lunch money. That's about a $2 candle on SPY. Yeah, it's a really big candle. I think that it's going to be bullish. I just want to get a decent price to close this. That's all I want. But we'll see if that's the case for us. All right, it's coming down, actually. I don't see how the markets would perceive that as a bad report. I thought everything was pretty good. So let's get out while we're ahead. I'll try to close these at 44 each. Oh, they just went up to 47, but limit order to close the 396, 395, put debit spreads at 44. So nice little $24 of profit. I think that the markets are going to react positively to this report. So I think we move on to a call debit spread after I post this, of course. Now I need to go to the Discord. Yeah, of course the markets go up while I'm wanting to open a new one and posting this. That's okay. We can miss some opportunities. All right. Closing options alert. Everyone just took profits on the SPY 396, 395 called put debit spread expiring 12/9 at 528 over 12, 44 each. All right. Let me open a new call debit spread. Now, I think we'll probably go above 3. Maybe we recover this candle, that 396.74 mark, but kind of hard to say. Let's see, SPY. You will pay a pretty penny for this spread, I'm sure, because it's already trading at 396. You could go a strike price higher and say that it'll be above 398. That I think will be pretty hard pressed to go above. But right now the 396, 397 spread is going for 49.50. I wouldn't be willing to pay more than like 45 for it, so not worth it right now, in my opinion. But that was a good report overall. So I think, given that we had a good inflation report, better than last month at least, and then this report coming out, where basically everything improved, I think that markets are probably going to trade up or flat today. So actually, I want to do a put credit spread. I know that put credit spread isn't going to pay me as well, but I think we'll probably stay above that 395 mark that we tagged below. We are pretty close to it already, so we probably will get a decent credit. $27 of credit for each spread that we open. And I would probably want to close if we go below 395.14. So let's create an alert with that price level. That would make these spreads around $40 a piece ish. So say everything goes wrong with this, and I have to close them at 40. I would say I would open, let's see. There's a 40-cent difference, 40 minus 25 right now, so 15 each. I would probably be willing to lose like 600, 800 on this. So let's see. 600 over 15, like 40 of these spreads that I'll be opening for hopefully a decent price. 26 it seems like. So we'll get $1,040 of credit. And if everything goes south on us, then we should only lose about 600-ish or something like that. So this is a new trade alert. Put credit spread. God dang it, every time. All right, so unless any other crazy news comes out, I think this spread is going to stay out of the money, so we should get our profit. All right. New options alert. Everyone just opened a new 394, 395 SPY put credit spread expiring today, 12/9 at 30. No, we didn't get 30. We got 20 something. 1040 over 40. We got 26 each. Michigan report came in better than expected, and inflation came in better than last month's report. So I think markets will trade flat or up for today unless there's any other major news. I should specify producer inflation. Okay. So let's check on that Lulu, and I don't think I'll make any more trades after that. But hopefully we make some decent profits today. The gold spreads that we have are up right now. Gold's trading at 167 GLD, that is. That's not the spot price of gold. But that's trading at 167. We're assuming that it'll stay above 164 next week. I do kind of want to close some of them before the Fed meeting. But let's check on the Lulu spread now. The bid is at 960, ask is at 1030, so we should be able to sell these. Excuse me, at like 950 hopefully. Robinhood's saying that the mid price is 907, but Aries is telling me that the bid is 960. So I think if we put it in for 950, we'll get filled. Nope. Of course not. All right, so I'll put in the order. I'm getting absolutely ripped off for this, I'm sure, but I'll put in the order for 930. Yeah, so we ended up getting filled at 930, even though I know the freaking best bid was 960 based on Aries. But Robinhood likes to tell you, oh yeah, you're getting the nation's best bid or best ask. Baloney is what it is. But thanks to Gary Gensler, they might actually be working on improving that at the SEC. We'll see. I mean, can't really trust what the SEC says because they are a government entity. Closing options alerts. Everyone just took profits on the Lulu 370, 360, 370. Put debit spread expiring next week, 12/16 at 9:30 each. All right, open those at 410. So 930 minus 410, 520 times 2, $1,040 profit. Nice trade. And yeah, the last trade that we have is this SPY put credit spread that I opened, assuming that we're going to stay above that 395.14 mark. Let's see if there's any news that's coming out that might send it below 395. I think there's still a decent chance that we stay above it. So we are getting a decent sell-off right now. We're probably just going to end up, if I had to guess, if we do end up trading flat today, I would think that we're probably going to be between 394-ish and maybe that 397 level. So if you want to open an iron condor, I would assume that would probably be between 394 397. Now you do have a very tight range on that, so keep in mind that it's not likely to stay in a tighter range than it is a wider range. But I'm sure that you'll get a handsome credit for that. If I had to guess, if you get it December 9th, I don't think that I'll make this trade myself, but I do want to check it out at least. If we sell the 397, buy the 398 calls, and then for the puts, we would sell the 394, buy the 393. Actually, that's not a bad trade as much as that's paying. That's paying $54 at the bid. That actually might be a decent trade to take. I'm going to create an alert with the 396.74 level at or above that. But I think we just trade range bound. If we're flat today, we're probably going to be between 394 and 397. Would be my guess. Maybe you give yourself a little bit more room to the upside just because I am slightly bullish. Do you just let the 0 DTE expire? No. I always close before expiration because otherwise I usually end up taking my max loss. So if you go one strike price higher with the calls, you do end up getting $8 less credit. But I am more optimistic about the market than I am pessimistic. So I think that it still might be a decent trade. Let's see. 48. I would probably only risk like $300 for this, so very little risk. Because I'm not super confident, just given how tight the range is. But let's see. So they're going for 50 each, so that means that you're risking 50 each spread. So you could open 6 of these for $300 of credit. Well, the bid just dropped. So open 6 at 48, and that'll be the last trade. So again, I want to close if we go probably above 396.74 and significantly above that, or significantly below 395.14. Otherwise, I'm just going to hold this spread as long as I can and then try to close it at like 3:30 p.m. Damn. I guess the bid dropped on us to Oh, it's 43. That's not even worth it anymore. I'm not going to take anything less than 45, so I'll put that as a limit order. If we don't get filled, we don't get filled. Let's see. Yeah, it doesn't look like they want to fill us for 45, so we might not get it. We might not get that. I've also been using iron butterflies. So the difference between an iron butterfly and an iron condor is with an iron butterfly, you pick a specific price that you think the markets are going to be at. So what I've been doing is I start with an iron condor, assuming that it's going to be between X price and X price, right? So between like this one, 397 and 394. And then I use the price levels that I have to take a guess at where the markets are going to be. So if I were to open an iron butterfly, I think that the markets are probably going to land either at 396.35 or 396.74 because I'm bullish for the day, but I'm also neutral. So with that one, you would want like a 396 or a 397 short strike price for the iron butterfly. So you would sell either a 396 or a 397 call and a put option. And then you would buy a call option with a higher strike price, depending on what range you think it's going to be. So I'd probably buy like a 398, and then I would probably buy a 394 put. That's how I would set up a iron butterfly. It doesn't look like we're going to get filled for that spread at 45, so I might just open an iron butterfly instead. Again, assuming that we're going to be either at 396.35 or 396.75, so that would be 396.50. I'll do the 397. So I'll sell a 397 call, 397 put, and I think we're going to stay range bound. I don't think that will go probably above 398, but I'll play it safe and say 399. I don't think that we're going to go above the pre-market highs. Oh, whoops. So $2 up. So buy the 399. Oops, that's supposed to be a call, not a put. And then I would buy 2 strike prices down. And that's paying $150 of credit for $200 of collateral. So you're only risking $50. You get $156 to open this. So I think that's actually decent. With an iron butterfly, though, you don't want to risk a lot of money because the odds of you picking the exact strike price that SPY is going to end at the end of the day is very low. So you want to lower your risk accordingly. Serves as a magnet, that 395. Yeah, and it's also a nice little like round number, so there's that mental aspect to that 395 mark. So just dump UVXY for break even. Fed probably won't do 75 base point. That's not really the point of the Fed meeting. Like, everybody already knows that they're going to do a 50 basis point. The big event for the Fed meeting next week is the summary of economic projections. And the Fed has already said that they're going to raise the terminal rate, so where they expect the Fed funds rate to be in the long term, and they're probably going to raise their 2023 estimates too. So if that's a lot higher than what the markets expect, that's going to cause a major sell-off like we saw for the September meeting and for the June meeting. So it's not all about just the 50 basis point rate hike, at least with this meeting, just because it has that summary of economic projections in it. It's not impossible, yeah, like you said, and like I've been saying, like I do think that there's, like a 2% likelihood, but there's still, like 2% is greater than 0, right? I'm glad that we know our numbers and we know that 2 is greater than 0. But yeah, let me try to open this. I think I'm willing to risk 200 for this iron butterfly, so I'm going to open 4 of them, get $600 of credit. I think I'm going to have to open it a little bit lower. I'm just going to put in 150. I'll take the lowest price that they're willing to give me. That's fine. And I'll need to take a screenshot of this on my phone too, so people know what strike prices to use, which ones to buy, which ones to sell, and everything. But basically my assumption with this trade is we're going to end the day at the 397 strike price. Oh, come on now. New options alert. Everyone just opened a new SPY 395, 397, 397, 399. Iron Butterfly expiring today, 12/9 at 151 each. Ooh, something feels like it's stinging me. Huh. All right. Looks like we're back to that 395.14 mark. Hopefully we bounce above it and stay above for the put credit spread, but let's see what those are going for before I head on off. Yeah. All right. Yeah, so they're going for 40 each. I think that's expensive given that it's not at the 395 strike price. So you could sell more, but I don't want to risk any extra. Let's see. Just got a notification that they're down 20%. Yeah. Trust me, Robinhood, I know whenever I'm down or up on an option. Recently been using volume profile, and it's impressive how point of control works as a magnet. Yeah, like the volume profile tool is actually very useful. Probably one of the more useful tools that's available on like Thinkorswim and like other platforms, because that's, the price that people have bought or sold at in the past, so that it can be like a gauge of whether somebody is profitable or if they're at a loss. And most people just want to at least break even, so those volume profile levels are very important. Got about 6 minutes until 10:30. I've got a meeting in about 5 minutes, so I think I'm gonna head on off as long as we stay above this 395.14 mark. Looks like we bounce on it again. Investing.com has a couple more events listed today as 2-star. Let me check. Like the way that they star things, I don't think really makes sense. So they have the WASD report. Actually, don't know what the hell the WASD report is, if I'm being honest here. Then they have the CFTC crude oil. So that's more pertaining to like the oil market, which hasn't had a large effect on like the regular stock market ever since like the Russian invasion. Like the speculation on the stock market and oil has kind of died off to where they don't really correlate with each other like they did back in March or April, whenever Russia first invaded. So you kind of have to be looking out for what's moving the market. Like a couple months ago, a couple months ago, the only thing that the market focused on was the 10-year treasury rate. So whenever the 10-year treasury rate would go up, stock market would come down, and then the inverse, if it went down, then the stock market would go up. And that's basically the only thing that the market cared about for a good probably 3 to 6 weeks. So the markets pick one singular thing to focus on for a given amount of time, and then they move on to the next subject, basically. It's kind of how the markets work. So you have to be able to determine what does the market focus on now. And I would say right now the focus is increasingly on the odds of a recession, which is likely going to lead the stock market down. If people anticipate that the economy is going to slow down, then they're probably going to sell out of their stocks, come up with more cash in order to buy things cheaper. But yeah, that's kind of the theme. So the markets have a theme it's very cyclical. It lasts for a while and then it fades. And then you have to move on to the next theme and figure out how it affects the market. But yeah, that's the trading day for you. And I will catch y'all either on Sunday if you're in the premium Discord, or I will catch y'all on Monday at 9:30. All right. See you, everybody.